let's get straight to it with somebody who knows the Australian property market inside and out. Cameron Kusher has spent literally decades researching the Australian property market and the trends that move prices, shape opportunities, and of course impact investors. I spoke with him just a short time ago to get the very latest on where the smart money should be looking right now and what to watch out for. So I started by asking about the single biggest shift that Cameron has seen in the Aussie property market in the past 12 months.
Big shift's really been that interest rates have started to come down and we've started to see housing market activity really lift. And it's lifting right across the board. Investors are coming back in. Obviously, that's who we're here to talk about today. But we're starting to see that upgrader market pick up in activity as well. And then from October, there's going to be a lot more stimulus for the first home buyer segment of the market. So we're probably going to start seeing more first home buyers coming into the market as well. We know that lower interest rates boost people's borrowing capacities. But I think just generally there's a sense of optimism starting to come about. And we saw that recently in the latest GDP data, that economic growth was stronger than forecast. We also saw in the latest GDP data that household consumption was a lot stronger than forecast as well. So I think there's just a sense of optimism returning to the broader economy, and the housing market's really benefiting from that.
And we'll see what happens with the RBA next week. But we know that investors can often default to residential property. Right now, are there other corners of the market that offer opportunity or deserve some attention in your view?
I think there's definitely other parts of the market that people should consider as well. I mean, residential property is probably the simplest, the easiest to understand, but industrial is still quite strong. And I think there's increasingly some opportunities in that commercial space as well. We're starting to see after a pretty dire few years, that commercial property market turning around as well. Obviously, if the economy continues to improve, you've got the retail sector that's likely to lift as well. And then you've got other investment types like childcare, which is particularly strong at the moment. And even things like student accommodation. As interest rates come down, we'll probably start to see more student accommodation being built too.
Right. All interesting. But where do you think perhaps investors should tread a bit carefully? Are there parts of the market that inherently carry more risk or that are looking more risky right now?
Look, I think the problem in the investor market at the moment is probably speaking more on the residential side of things, is that people are piling into a lot of the same areas. So if we look at the moment, we're seeing a lot of investors going into the Darwin market. That's because Darwin prices haven't moved for about a decade. Rental returns are really strong. And a lot of people that recommend to investors where to buy are saying go and buy in Darwin. Now, that does drive up demand and drive up price, but you've really got to think about the fundamentals of those areas as well. We're seeing a bit of this in regional markets as well, that a lot of investment advisors are telling people to go and buy in certain markets, and that is pushing prices higher. But you really need to do your due diligence and understand what the local drivers are, what the long-term prospects are for a market, not just that the yield's good now and interest rates are low and prices haven't moved a lot. In some of the other asset classes, commercial, I think office is starting to improve, but we're really continuing to see a flight to quality in that market. So it is getting good quality assets and not those lower grade assets. Retail, still be a little bit cautious there. And industrial, whilst there's still some opportunities in that industrial space, we have seen the cost of industrial property and rise quite substantially, and yields come down quite a lot.
Interest rates, as you've mentioned, housing affordability, home buyers coming back to the market. Obviously, they generate a lot of the headlines around property. What is a factor or some sort of a thematic in Australian property that you reckon does not get enough attention from investors?
I think the big one is the amount of stock on the market. You have a look at price growth in places like Perth, Adelaide and Brisbane over the last couple of years. There is a dire shortage of properties on the market in those areas. I think one of the other big factors is just how much construction costs have gone up. So one of the toughest parts about delivering new housing at the moment, which we desperately need, is the fact that in most parts of the country, new homes are still at a significant premium to existing homes. And at the same time, in those markets I just mentioned, you've got very little established housing stock. So I think people focus on interest rates and prices a lot, but you really need to be looking at how much stock is sitting there on the market and how is that impacting on demand for housing? How much is that contributing to price increases?
Before we get to a little conversation about Home Compass, which is sort of prop tech, I just wanted to get to one question from a viewer, Andrew, because it is relevant to everything that we've just been discussing. And he writes, and it's a pretty basic question, but really goes to the heart of what we're doing here today. What are your thoughts on investing in resi, so residential, versus commercial and industrial?
Look, I think it's a lot easier just to invest in residential. I think most people own a home. Most people are familiar with what goes on with housing. When you get into industrial and you get into commercial and other asset types, it is a more complex investment. You can be susceptible to periods of greater vacancies. A lot of rents on commercial properties are given incentives, whether that's fit outs or rent-free periods. But in saying that, commercial can be very lucrative if you do get a good asset, you get a long-term lease. So I think there's a strong preference for residential, but people shouldn't discount the opportunity to go and invest in commercial properties as well. But it's one of those things you really need to do your due diligence when you're investing in a commercial property, and you need to make sure you're getting the right asset. And I guess it's harder to find out information about commercial properties than it is residential properties.
Right. Thank you for that. All right. You had a big announcement at Kusher Consulting there the other day. It's called Home Compass. What is it? And importantly, how can property investors use the platform? Can property investors use the platform?
They definitely can. So Home Compass is a product that I've developed, and it's basically, I've been tinkering with this idea for a while. A lot of people want to buy property, but buying property is a very daunting prospect. And largely you're left to do it yourself and figure out all of the data that's out there, figure out all of the information and try and decipher it, or you pay quite a high fee to a buyer's agent. What I'm looking to do with Home Compass is take my 25 years of experience researching the residential property market, backed by data, and trying to help people find the right property in the right location. I get a brief, I get must-haves, like-to-haves, and I go about finding those properties for anyone using the service, and that service comes at a fraction of the price of a buyer's agent. So if anyone is interested, go to my website, kusherconsulting.com.au, and click on the Home Compass link, and you can find out more information there.
Right, so it's data-backed. Thanks. I think this is the first sort of format maybe that you've talked about it in great detail, so I guess you can be contacted for any more information. All right, we're running out of time, so if you had to give investors one guiding principle to navigate the property market over the next 12 to 18 months, what would it be? I mean, so much of it comes down to rates, I guess?
It does. It comes down to interest rates. But look, I think there's going to be a flight to quality. And even though there's going to be a lot of people out there chasing opportunities in some of these smaller regional markets that look very attractive at the moment, I think that the best opportunities are going to be in the bigger capital cities and in regional markets with diversified economies. So I think there is a big opportunity for investors over the next few years. We've still got very low rental vacancy rates. We've still got very strong population growth. We've still got, a deficient amount of new housing and new infrastructure being built. But I would say don't just follow the crowds. Go and do your research and find those opportunities that are coming next, because piling into those opportunities that everyone's going into right now, you're going to miss out on better opportunities that may lay out there.
Well, thank you for that, Cameron. I've had a question come in, and I'm going to sneak it in because I should have asked about AI in relation to Home Compass, but Ravi has said and asked, as AI becomes more integrated into property and finance, I suppose, what ethical and regulatory challenges do you anticipate? How's AI changing, property research, property data, property opportunities?
Oh, look, it's really revolutionizing property research. It is a lot easier to find out information, but there's also still a lot of misinformation in AI. I play around with AI quite a bit, and You just have to have that nose for seeing things and going, that doesn't quite look right, and ask more questions. So I think that people will be promoting that they've got AI this, AI that, but you want someone that actually has the understanding of what the data and information says to question whether the AI is giving you the right information. And it's certainly not at the point yet where you can just outsource doing everything to AI.
Yeah.
It does need a lot of checking and reviewing, and you do need to be able to ask the right questions and ask quite deep questions to get the outcome that you want. So AI is certainly a great tool that helps, but it's not at this stage, at least, something that you can just outsource all of your work to.
Cameron Kusher, Kusher Consulting, and Home Compass, thanks so much for joining us.
Thanks for having me.